Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Each year in June, the reconstitution of the Russell indexes take place in what's called the Russell reconstitution, one of the biggest trades at the market close of the year. On June 26, 2020, about $9 trillion in investor assets will be rebalanced. Last year, more than $100 billion was traded at the close of the Russell reconstitution, and this year it is again anticipated that we will see record volumes. For the 17th consecutive year, the Nasdaq closing cross will be used to rebalance Nasdaq-listed securities in the entire family of Russell U.S. indexes. The rebalance is designed to ensure that the Russell U.S. indexes continue to accurately reflect the ever-changing state of the U.S. equity market and its segments, and it takes on a more significant meaning for 2020 as markets have experienced significant volatility this year and seen equity trading volumes reach new highs. Joining me to discuss the importance of the Russell reconstitution to the market and investors is Ed Coughlin, Director of Trading Services at Nasdaq, Catherine Yoshimoto, Director of Product Management at FTSE Russell, Nick Kalivas, Senior Equity ETF Strategist at Invesco, and Stephen DeSanctis, Head of U.S. Small and Mid-Cap Research at Jefferies. Everyone, welcome. Ed, I'm going to kick it off with you. One of the largest trades of the year. How does the closing cross work?
So I would caveat that it is the largest trade of the year, and everyone is actually kind of, all eyes are focused, on this day every year. I know my staff is all told every year, everyone's in on Russell. So we're kind of all hands on deck. We're prepared for it. And again, that's just out of an abundance of caution to be able to, talk to people, confirm the orders that they have in, answer any questions related to how to trade in the close. The close itself operates no differently on Russell than it does any other day. If you look at, in comparison, last year, the Russell traded 1.2 billion shares. And what's amazing to me is what technology has afforded us. 1.2 billion shares is all traded, executed, calculated, reported to firms, reported to the trade reporting facility, all in about 1 second. So what technology has allowed us to do is to really speed up a process that used to take long time to collect orders, to match up people. And the auction, and Nasdaq is kind of the leader innovator in the space of electronic auctions. Over the last couple of years, we've made some changes to the close to increase the transparency of the information that goes out there, along with increasing the flexibility in how to participate in the close. And we strongly believe those changes have given kind of more flexibility to people to be able to trade these large trading events, which, could you have foreseen, 5 years, 10 years, 20 years ago, us trading, 1 billion shares of stock in a second? I'm not sure that was on the radar for anyone, but yet we're here. And it's really important that the marketplace has confidence in the technology and the systems that we offer to be able to do that trade. How it actually operates is, in essence, that at 3:50 in the afternoon, we disseminate what we call net order imbalance information to the world, or the population of traders that are out there, informing them of what shares that we have paired off, what the indicative price of that security is, and what direction any imbalance that exists at that moment in time. And by publicizing that information and being transparent about it, it leads to people wanting to interact with those imbalances. So if there was 1 million shares paired in stock A, B, C, D with 1 million shares paired, or I should say 1 million to buy, those parties that were interested in selling or use this as a liquidity event to either liquidate positions, or conversely, if there were sell imbalances, to initiate positions, are kind of all eyes on their screen, looking at the data and looking to be able to opportunistically trade. And what we do with that information is between 3:50 and 3:55, every 10 seconds, we update the information, we tell the world what's new, what's going on, and new orders are flowing into the market. At 3:55, we no longer accept market orders, but we continue to accept limit orders into the close that help offset those imbalances. And we disseminate that information then every 1 second. Every 1 second, you're getting a peek at, if the auction were to go off at this moment in time, these are the shares and these are the price in which this security will trade at, come 4 o'clock, okay? And that collection of orders that continues to come, you have an ongoing kind of dynamic price discovery mechanism where people are allowed to weigh in, with their orders. If they think the price is too high, they come in with sell orders. If they think the price is too low, they come in with buy orders. And then ultimately at 4 o'clock, when we do that cross, all of the orders are matched, and then we arrive at that price for that security at that moment in time. As I said earlier, last year's event, there was 1.2 billion shares. We certainly expect a bigger event this year based upon what we have seen so far out there. But I'm really looking forward to Friday. I often tell people it's fairly boring during the middle of the day on that type of a day, and then everybody's waiting around till the end of the day to make that opportunistic trade. But in all reality, my desk, we open the markets efficiently, we kind of wait around during the day, markets trade, they arrive at prices, and then there's a big closing event. But we're really looking forward to it. We're happy to have everybody on, and happy to be here to talk with you and educate people about how the Nasdaq close works.
Yeah, and we appreciate that. And it's really quite remarkable where the technology has taken us. And Catherine, why is the Russell reconstitution such a big deal for the U.S. markets overall and investors?
Russell reconstitution is a complete realignment of the Russell U.S. indexes, such as the Russell 1000, Russell 2000, the Russell U.S. style indexes. It reflects the past year's market changes. And you already alluded to the fact that there's $9 trillion in assets following the entire Russell U.S. index series. So the index is rebalanced to update membership, to include new additions, IPOs, update shares and free float. Companies that no longer meet the index rules are removed from the indexes, and the new Russell U.S. index members are re-ranked by company size, and their style designations are updated. So it's really important that we provide an accurate reflection of the U.S. equity markets. It's a closely watched, well-communicated, and transparent event. Rank day was May 8th this year. Initial changes were announced to the market on June 5th. We provide investors plenty of lead time to begin our query process, address any challenges. And after markets close on Friday, this Friday, June 26th, the changes become final. The updated indexes begin running Monday, June 29th at the open.
And Nick, from an issuer perspective, the importance of the rebalancing on dynamic factor ETFs that Invesco manages, how is the Russell reconstitution going to impact those ETFs?
Yeah, so this is really important because the reconstitution is going to reset the universe of stocks that are available to go into the ETF. And so the impact's going to happen on a couple of levels. First of all, there's going to be kind of a new picture of the size factor. So with the big concentration that's expected to take place, I think the press release talked about 10 names accounting for 23% of the Russell 1000. When the ETF is searching for smaller size and you pick that up, you might see a pretty big differentiated return, from that size factor and the large caps that are present. So one thing is going to be the size factor and how that plays off. The second important aspect is as you shuffle the deck with the new names coming in and out, when the ETFs are looking for, the factors such as quality or low volatility or value, you have this new pool to essentially search and find that factor that you're looking for. And so from that aspect, it's very important because it's going to flow right down into the factor exposures.
And Stephen, let's learn how it's going to impact different kinds of investors, whether you're a growth manager or a value manager. How important is the Russell Recon to their portfolios?
Well, thanks for having me as usual. And, it's important from a long-only standpoint on, obviously, as Catherine highlighted, it resets kind of the style. It resets where we are on size. So top end of small cap is going to be a little north of 5 billion. Top end of mid cap, believe it or not, is starting to approach the $40 billion mark. What ends up happening, a lot of it is around sector weights. Managers want to know if they're overweight or underweight various groups. And obviously, given the turnover that we're seeing in the benchmark, we anticipate turnover that's going to be probably twice as high as it was last year, 2019, obviously due to the volatility of the market. And so with that, there's going to be some pretty big sector shifts. So what we end up seeing, growth managers may have to pay more attention to healthcare, as healthcare has been a very good performer. That's going to shift over to growth. And some of the areas that haven't worked, financials, consumer discretionary, and especially industrials, tend to be more value-oriented groups. And so managers that are overweight certain groups don't want to wake up on Monday and realize that they have a big mismatch. So they've been looking at this for about 2 or 3 months now. We've been providing lists since really the middle of April, and obviously it's a little challenging given the big swings around performance, but we're trying to update and kind of getting people used to where the sector weights are leaning.
And Stephen, in terms of preference, which sectors, what areas of the market do look the most attractive to you? Because you are right, valuations are certainly stretched here. One, because of the run that we've had in the market because of the volatility. And of course, there's liquidity being injected into the system all the time. So what's attractive in the market at this point?
So we've been actually on the, I would say on the wrong side of the trade for the last several months here, because we've been much more in the cyclical camp. Valuations look the best as you start to get more to the underperformers. And the gap is really starting to be quite noticeable. The gap in valuations are where we were back in 2000, 2001 in the last tech bubble. And so we've leaned more towards industrials. We've leaned towards materials. We just downgraded tech. We still like healthcare, but we'd be a little bit more selective inside of healthcare. I think the way we kind of think about it is we like the cyclicals. We do like secular growth, maybe not as much as most people like secular growth. And we are definitely more underweight the bond proxies, the staples, utilities, staples, utilities. We put comm services in that bucket as well, especially as you get down cap. So we're a little less defensive, a little more economically geared.
And Nick, I'd like you to follow up on that as well. How can investors think about navigating or positioning a portfolio in the current market environment when you're looking at growth versus value and where valuations are right now?
So from the perspective of factors, which is what we're focusing on, what we tend to find is that when the economy is coming off a low point and starting to see accelerating economic growth, that's a period where we see the smaller size and the value factors do very well. And there's a lot of evidence that we're moving in that direction, despite the great uncertainty we have over a second COVID wave or the election or U.S.-China trade tensions. I mean, you see things like mortgage applications hitting the highs that we haven't seen since 2009. We've seen acceleration in regional purchasing managers indexes, pointing towards growth. You've seen a pickup in energy demand off the low. And so these things point towards, value and size doing well, and they argue for other factors like or quality or low volatility kind of taking a step back at this time in terms of their leadership.
Nick, thank you. And Ed, I'd like to go back to the technology and the volatility conversation. Are any technical concerns around what's happening with the Russell reconstitution on June 26th? I mean, it's really quite remarkable how the markets have held up during these pockets of volatility. And Catherine, I'd like you to follow up on that as well.
I guess when you think about it, certainly there's no concerns on our side other than preparedness. I'd rather be prepared and have a boring day than anything else out there. But for example, when we talk about, last year doing $1.2 billion, last Friday for Quad Witch, just to put it, in a frame of reference, March, June, September, and December is a Quad Witch. Those are, outside of Russell, probably the busiest trading days of the year. 1.2 billion shares last Friday, and nobody, a beat. In terms of, the transactions and whatnot and price discovery. And one of the things in terms of managing a trade desk, how I do auctions, nobody calls me up and says, oh, you did a fabulous auction today. When I hear there's a problem, people will call me if there's a problem. So I know if my phone doesn't ring, everything went well. And I often, I talk to the street a lot, and, I often will joke with I hear from you when there's a problem, but I didn't hear from you. Everything went fabulous today. So, it's just the nature of how things are, but certainly we don't have any technology concerns. We're more than amply prepared. all of our stress testing, all of our capacity testing is geared towards this day in terms of happening. And if you look at how the market held up over the last 3 months, and I would say, credit's not just due to Nasdaq, but to the entire kind of ecosystem of market structure, the exchanges, the market makers, liquidity providers. I think if you put your head in a bubble and you woke up and you didn't know what happened and you read a story, well, how would the markets have reacted? You might have come out with some different scenarios than actually how the markets reacted. If I look back and I see people saying, "Oh, we should close the markets; it'll stop the markets from going down," the markets operated, as they're intended. They're there as a function to allocate capital to companies that are doing well. If companies are doing poorly, obviously, capital may come out of those. But overall, back to your question on the technology aspect, and we're very comfortable with the day. We're more than amply prepared. I hope for it to be a sleepy, boring day.
Okay, well, we hope we don't hear from you on Friday, that's for sure, Ed. And Catherine, I'm going to give you the last word. Same thing too. Any concerns from FTSE Russell on the impact of technology and the volume that's expected?
I think Ed summarized how we've been working virtually the past few months. It's just a true testament to everyone's business continuity processes. We at FTSE Russell are certainly expecting to see an orderly event. We've been communicating with the market for the last 2 weeks, and the transparency of our process, combined with the smooth operations of our major U.S. exchange partners like Nasdaq with the closing cross, it'll make for high volumes, but an orderly process. So we're looking forward to Friday.
Yeah, and let me just add to what Catherine said in terms of transparency. They've done a great job. Everyone knows it won't be on Friday afternoon at 3:50 that somebody finds out that there's $1 million to buy. They've known that for the last week and a half. People are prepared for the event. There are lots of natural liquidity sources that use it to opportunistically trade. There are all kinds of market participants to look to this day, to kind of mute the event. Somebody hears there's 20 million to buy, there's 10 million to buy, and you kind of like, oh my God, can the market handle that? I give credit to the indexers who announced those changes. People are well prepared. There's lots of analysts out there. Stephen's commenting. So this is not an unknown event that people are surprised by it.
All right, great. Ed, Catherine, Nick, Stephen, as always, thank you so much for joining us for our annual Russell Reconstitution panel. And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.